Welcome on the show today. I've got Preston Letts. How are you doing, Preston?
Doing well, Max. How are you?
Man, awesome. Great. Well, we want to get to know you a little bit better, and you're doing some really cool things, and you've done some cool things. So definitely stay tuned and take some notes. Preston, how long have you been in real estate, and what kind of was the decision making around that?
So I would really say I've been in real estate or working in real estate since really 2002. I was just freshly out of college and was in 100% commission sales position selling life insurance at the time, and was really kind of focused on learning as much as I could, getting to know the financial world. And as a result of that, somebody had introduced me to the book Rich Dad, Poor Dad. And I think I devoured it, read it in 2 days, and just absolutely loved it. And I think from that, it was like, big theme in that is ownership of real estate. And so I put that book down and was like, told my wife at the time we were going to invest in real estate. And so first house I ever bought, we followed an untraditional path. I bought a duplex, bought it, literally went to there was two units, one was vacant, went to the first unit and started knocking down walls the first day. Was like, we're going to open this thing up. We're going to make it really nice. Went back the next day and there was a stop work order on my property. And I'm like, wait, what is this? Who can tell me to stop doing work here? So literally just jumped in, didn't know a thing, and was like, we're just going to get started. And that was really kind of what got me into real estate. And I've been really, was in the financial world until 2006, and then said, I really want to be in real estate and want to be in real estate full time. And so left that, kind of sold that business that I was running and jumped into real estate.
Wonderful. So what do you specifically do in real estate now? What are your main, exit strategies, and what opportunities do you like?
So let me just kind of back up a little bit of the story before that, because when I got into in 2006, it was really more on the brokerage side, and then property management side. So I spent the next really 11 years building a property management company in Chicago. And during that time, we built probably arguably one of the biggest property management companies in Chicago that serviced individuals, entities that managed anything from single family home, townhome, condo up to about a 50 to 100 unit apartment building. So built that from 2006, sold it in 2017 to a private equity firm. And right at that time, it was, part of the reason was, looking to sell was we built a really good big business. We managed about 1,500 rental units in Chicago, all over Chicago, had a staff of about 50. I was a sole owner and was kind of stretching my bounds and really wanted to get out of the property management world. And so we sold business at that time, and the company I sold it to required me to work for them for the next 3 years. But the minute I sold, I started looking at, okay, what's going to be kind of, my next chapter, or where am I going to go from this? And so my wife and I have always loved real estate. We always loved investing in real estate. So we decided, let's really focus on the investing side, either buying rentals or also looking at really the rehab space. We really love that side. We got a taste of it when we, a number of years ago when we remodeled our house. And so really for the last 3+ years, we kind of took all of that kind of passion and focus on the property management side, and have really, jumped in hard and heavy going towards, either buying rentals that we own or looking at properties that we can buy and redevelop and look to sell.
Very cool. I know that, you and I both work with business owners that are, private lenders in our real estate business. And a lot of business owners, one of the things that you said earlier kind of made me take pause is, you've successfully sold your interest in 2 businesses. There's a lot of business owners right now that feel like they're making a lot of active income, but they're really a slave to their business, and thinking about how to sell it and how you would even structure it or start that process is like a really foreign concept. And so can you kind of maybe walk through a little bit about how you came to that determination, and maybe what it takes, like structure wise, to position yourself the right way to be sellable, and the timing and all of kind of what went into that?
Absolutely. I would say that first things first is the process that I went through to sell my business, which all in all total was about a year and a half process, from really the intro to sitting down with the first group that approached me. I ended up getting approached by 3 different firms within like a month, and had competing offers. From the time that I met with them to the time that we closed and, the funds hit our bank account was about, it was all of really 18 months. And I learned more in business in that 18 months than I probably had learned in the previous 5 to 10 years. It was a tremendous process to go through from a learning standpoint, which is one of the big reasons I did it, is I knew that what I would get out of it, I'm still young, I'm 42, what I would learn as a result of that would make me that much of a, and more valuable as a business person. But what I would really say, to answer your question is getting yourself to the point where you are getting out of the business and you have really tight, good systems, processes, and key leaders underneath you that are really running the business. The more that the business or any business is reliant on the owner, anybody coming in to buy it, it's automatically going to be devalued in their perspective. Because there's a lot of businesses that, they're kind of an upside down, triangle, where if the owner leaves, that thing's toppling, and the owner's doing way too much, taking on way too much, and hasn't taken time to really build a business and building the leadership team underneath them, building out their systems and processes, and building, a business. And I was fortunate to have already started that process. I wasn't far enough along as I should have been. I would have gotten more money had I, because my multiple, got hit, knowing that how active I was and how much I did in the business. But, really the key is people talk about firing yourself. I mean, the reality is if you're ever looking at selling down the road, it needs to be a 3-year plan of how am I going to slowly exit myself from the business? How is this thing going to survive without me? And then really, most importantly, who are the key leadership and personnel that can actually kind of take that, kind of take the reins and are really going to help be the driving force in the business. So
sure.
I was fortunate to start that process. And that's really when I started to have a lot of fun in the business, when you're growing and developing people. I took my favorite story is my best employee, I hired him, and he started with us at, $34,000 a year property manager. And when I finally left, he was making, like 115 and that was in, I think, 5 years, as the head of our, whole maintenance division. And to see him grow with the company and to see him tackle and grow as a person was, incredibly rewarding as a leader.
So when you were, that's amazing. That's amazing. When you were developing the leaders in your company, what was some of the key things that you focused on? Was it getting all the checklists right? Was it, the incentives? Was it the way that you structured the meetings, KPIs, and communication? Like, what were the things that you feel like, you progressed the most before you got approached to sell? And then what was the part that, you had to do a lot of work on during the sales process?
So what really started is, number one, is kind of identifying who were those key leaders or key positions that needed a leader, and saying, okay, I need to cultivate and work with them. And so we started with, I'm a big fan of a weekly meeting. And so we started with, I identified, I think it was 5 at the time, 5 key leaders. And we said, we're going to have a leadership team meeting, put it on their calendar, recurring, same time, same, agenda. And said, hey, you guys are now, we're going to create a leadership component to the business. The business can't always be me. It can't be, every decision. So we need to start,
Right.
kind of looking at the other leadership. And so we started with that, just as kind of me empowering them to say, hey, I need you to be a leader, and you may not be comfortable with it, but we're going to work on that. And that was a big piece. And we would meet every week. And really what helped with that is I then empowered them to say, okay, instead of me asking you questions about your area or your role in the business, is you're going to come and present to me and kind of flip that switch of, hey, here's where we are, here's what we're doing. And then, and that's how the meeting would start, is we would go around the room we had really 5 departments in our company. And it was, okay, our maintenance department, tell me what's going on, report your KPIs to the whole group. What are, what's working, what's not, what do we need to tweak and change? And then what are we going to work on heading into the next week? And getting them and forcing them to say, okay, they need to do the forethought, they need to do the planning, as opposed to me going, you need to do this, you need to do that. And that's a lot of what it was before that. So it was the start of that. And that was really the lion's share. But really what I think sealed it is every quarter we would step out of the business for a day, 2 days once a year. And we would have a meeting and we would literally go through, our strengths, weaknesses, opportunities. We would go through, a number of, I was a big, I got my whole leadership team to read the book and really implement a lot of scaling up, which is, if you haven't read it, it's a great book. It's a lot of what traction is built off of. Yep, exactly. Yeah. And we really implemented that and just took, kind of a section of the business and we slowly implemented it together. And that's really honestly what really started moving it together. We were reading that together. We were reading it, and that was a part of our weekly meeting as we kind of go over what we had read. But those days where you're stepping out of the business, or a day and a half where you're, really looking at the business and kind of developing KPIs or tweaking KPIs or developing and changing systems and looking at the business from a critical role and really forcing them to say, okay, how do we want to look at this and how do, what do we think are the key things that we need to work on and really making decisions as a group. And really that was it, is once I got them making the decision on what their department, what they needed to do, the buy-in for what they were doing completely changed. And they were bought into now, which is an incredible thing to think about as a business owner, is you've got 5 people in a room that are focused on just growing your business, increasing your net worth, making you more money. I mean, it's incredible. I appreciate it a heck of a lot more now based on where I am and as a result, but that is really what I think really seals the deal. And they loved it because we would get there, we would meet, go hard that day, have a nice dinner. Some folks are a little more on the, they wanted to, continue to drink and, have a good time. It was really about working hard, then getting up the next day and going hard for a half day. All right, let's finalize things. Let's get, what are we going to move? What's our critical action steps? Who's going to own it? And then boom, now we'd follow up and it was like, okay, the following week, here's what we went over. These are our key rocks. What are we working on? And then getting that ownership, getting that bought in, has for so long as a business owner, you feel like everything's on you. You're responsible for everything.
Right.
And you're driving everything. You have to do everything. And it's like, once you get a group where you're starting to work together and starting to create some little departments, like we created our party planning committee. And I took 2 people and they own the holiday, Christmas, and quarterly parties, which before that was all on me. And right. I'm not a good party planner. I don't do gifts well, I don't do parties well. It's like, I need somebody else to do that. And just giving it to them and saying, here's your budget, go with it, run with it, and make it great. People love the ownership component of being a part of something.
Bill Ackman and Warren Buffett and these guys talk a lot about incentives, and they say that if management, the business owners get the incentive correctly, the principal agent problem. If you get that part right, 99% of your management problems, your scaling up problems have been solved. Did you find that, was incentive a big part of it, or was it just about, consistently pouring in and leading your team? Can you speak to that a little bit?
That's a great question. I would say that I honestly feel like for me, it was really 50-50 on probably about that, maybe a little bit skewed, but getting a really good compensation and compensation comes in a number of different formats. It's not always monetary. It's not always, you're going to get a higher base salary. It comes in the format of, I'm a huge believer in performance-based compensation plans. They're kind of a pain in the butt to put in. But once you do, you realize that aligning your intentions with someone else is really the best way to be in business. But we would do our compensation, all that kind of, to me, came in a number of forms. It was that base compensation. What's their base salary? It's title. Title's another form of compensation. Taking somebody from like a maintenance director to the vice president of maintenance. Well, on a resume, maintenance director and vice president of maintenance is, or an office manager to the head of operations. That's a promotion, and that's a promotable title that can then be marketed out from, if they ever leave, to the to the rest of the market. And so that was another form of compensation that we really put a lot more, seems kind of silly, but and I thought it was kind of silly before, but it takes, it adds a lot. Being a part of a leadership team, that's another form of, and then also, I think also the time that you as the owner are developing and willing to invest in them as a team member, whether that's, sending them to, we went on some trips and went and visited other companies, and I brought some of my key leaders, and that was their opportunity and time to learn and, continue to grow. So I think the key with that is, I think and there's one other that I would throw in there is rewards with parties and, lunches, and, hey, you did a great job, I'm gonna take you out for, great lunch, or we had parties at the end of every quarter based on themes. I think all of those were really critical, and, they're all important factors and details of growing a business.
Very cool. So I have one more question there, and then we'll talk about how you utilize this in your, successful real estate business now. So you were talking about how you went to your team. Like we have a lot of business owners that listen to the show, and I've talked to them in confidence, and they're a little nervous that the team that they have now is the order takers, and it's not the team that they feel like they really need maybe to get to that next level. And so my question to you is that when you made that pivot and you said, hey, instead of it's going to be me asking you stuff, you're presenting to me, what percentage, I think you said the word, I'm going to need you to lead. And there's all these theories out there. And some of them are like, just like leaders are born, leaders are trained. If somebody doesn't have the right motivation, they're not going to be a leader. What was your experience when you made that transition with your team? How many of them really stepped up? And then how many of them got off the bus?
So I would say that 20 to 25% were ultimately got off the bus because they were not willing to, they weren't going to grow with the company. They weren't going to, they weren't going to take on more. They weren't going to move outside of their comfort zone. They were just going to kind of stay who they were. The best part is what it did is it made it very clear to me and to the rest of the team that they were not a good fit. Before it was kind of evident to me, but then what it really did is it was the rest of the team looking and going, kind of talking to me in confidence, like, look, we have a problem here. They're not either managing their team the right way or they're not really handling what they need to. We should look at, maybe potentially making a change there. So there's that percentage. I would really say the remainder of that really kind of jumped on and saw it as an opportunity. Some of them a little begrudgingly. I mean, nobody likes stepping outside of their comfort zone and doing more and maybe, being, pushed into a little bit more management. But those that did, were ultimately incredibly rewarded for it. And so it was definitely a 70-30, 75-25 split in that. But what it did is it forced me to step outside of my comfort zone, knowing, hey, I've got maybe a team member that I'd like, and everything's good and it's copacetic now, as long as we just stay where we are. But the minute we start, looking to grow, I kind of know that this is probably going to be a change, and that person's probably not going to be a manager of people. And that's a pain in the butt on me because I've got to let them go, and that's not fun. And I've got to go through the hassle and headache of turning that position over and training somebody and knowing that it's going to disrupt. Those are hard things to, hard decisions to make, and they take a lot of work. And so you have to be just willing to say, look, this is for the betterment of the organization. We're going to do it and go forward.
That sounds good. That sounds good. So let's talk about how you've taken all of those skills and you put them into your real estate business today. So where is it specifically located? Where are you investing in? And, and where is your team doing its operations, and what are you doing, more specifically in the real estate space right now?
So, kind of jumping into a new area, we've kind of have purposely stayed small. It's really my wife and myself as partners. And now we're slowly starting to build out our team because we recognize that, we need to start adding critical team members, to really help us to kind of get to our goals. We actually moved out of Chicago. We live in Greenville, South Carolina now. So our primary, so we're really investing in both Greenville, South Carolina, and Chicago. I've been in Chicago for 30 years. I built my property management business there. So I've got really our infrastructure there with, the right GCs, everything that we need to run that business. We go and visit every 2 to 3 weeks for, a few days, check on things, just make sure things are running smoothly. And then, we're investing now in Greenville as well. And so we're doing a little bit different approach in both markets to really fit and kind of fit the market. But we're doing that, and then also working to, slowly build our team for, really what do we need on the acquisition side, disposition side, the management, property management, et cetera. So
sure.
We're taking it slow and steady. That was, before I was go. This time we're being a lot more methodical and, kind of just step by step moving along.
Very cool. Very cool. So, there's a lot of people who want to get involved in investing in real estate, but they don't want to be like you. They don't want to be active. So what are some different ways that, folks can get involved in real estate, speaking to, turnkey or landlording or private lending? What does that look like, and what should they be looking for when they're trying to figure out what sort of, person, maybe like you, that's active, that's outgoing and getting deals and doing things actively in their areas? What should they be looking for in somebody that, to partner with?
It's a great question. To be honest with you, I'm a big believer in experience, and, somebody that has a proven track record, that has experience in real estate, and, is also in a financial position where, that, hey, they could fund a lot of the deals on themselves, or, they could, be smart and look to leverage. I think those are great individuals to work with. To me, I think that, I just, we just sold a property, and we just paid our capital partner, our private lender. And he's retired now, and he's using this as kind of an additional way to fund his retirement. And we had a great flip, and he ended up getting a 24% return on his capital because of, he was at a 12% interest rate on this loan. But because we returned it within 4 months, and we're able to, exit property, when we factored his annualized return on it, would have been, it was 24%. And so he absolutely loved it. And he's like, we have another property for, that he's rolling that money into. And his comment to me through this whole process has been, gosh, I wish I'd have done this 20 years earlier. I just wish I'd have done this 20 years earlier. It's like, I was interested in real estate, but I never wanted to really get active. He's like, if I would have been operating, and as a private lender, he's like, I would have so much more money. He was an engineer, a kind of C-level executive, did well, but just kind of invested in the market and just kind of let it roll. And he's like, gosh, if I would have been doing this all along, he's like, it's kind of scary to think about where I'd be. And so those are the kind of private lenders I love working with. There are, individuals that want to be in real estate, but they also realize that they're limited from a time standpoint. We take great care of our capital partners, our private lenders. We treat them like gold because they are our business. They are our clients. They're the ones that ultimately are allowing us to really, get out and acquire property and, do what we do.
So that's great. When people are looking to find somebody, we want to talk about the pros, but we want to talk about the cons too. So what are some like red flags, for folks if they're trying to find a partner to work with, an active real estate investor, they want to get involved, in the private lending space. What are some red flags that you would caution, your parents, to look out for, or your, uncle or brother to look out for, that is the sign that maybe this isn't really the type of person that they want to work with?
I think it starts with, I'm going to go back to number one, meeting them and getting a chance to know them as a person and kind of seeing what type of business person that they are, kind of getting a feel for, do they have their act together? Can they produce a nice presentation on what they're doing, their company? We call it a credibility kit, who we are, what we're doing, what's our vision, what's our long-term goal, kind of how we operate, what's our focus. But then also for every property we do, we have a quick little write-up that, has really a detailed outline of how this is going to operate and what's going into this. That'd be the real big piece that I really think that is going to separate somebody that has done this for a while, has a lot of experience, to people just jumping in. It's a lot more than going, oh, we're going to buy this thing for 100, we're going to put 40 into it, and we're going to sell it for 300. It's okay, well, how are you going to buy it for 100? What are all the costs associated with that? That 40 that's going into it, what exactly is that going to, entail? What's a detailed line item scope that's going to have every factor that's being taken into account? And then also, what are your comps on the back end? Are those real comps, or those, you're comping a 1,000 square foot house versus a 1,500, or and is it similar area? Is really having things dialed in. This is a very detailed business, and we find that, a lot of the inexperienced and newer investors, they tend to lack a lot of that detail. It's just, put the deal together and go. The better you get and the longer you've done this, you realize how important every little detail is. We line item out everything that we're doing and make sure that we have all of our ducks in a row, so that when we get into it, things are going to go wrong. We always plan for failure, knowing things are going to go wrong, or something could go wrong. Small little change here, small little change there. Is that built into the budget? Is that taken care of? Sure. Does the GC know every little detail possible? That's really what individuals should be looking for. And also the red flags. If they're not seeing that, then they should say, you know what, I'm a little concerned about this. I'm going to pull back and maybe look for someone who's a little more experienced. Wonderful.
Okay, that makes sense. Well, I got a couple more questions and then we'll wrap up. I want to congratulate you, obviously, on becoming a published author. What made you decide to go that route, and what do you plan, to do with your book? What's kind of your main objective?
So what really kind of is I enjoy sharing information. I'm a true believer in the concept of giver's gain. I grew my business because there were a lot of people, in all my businesses, there were a lot of people that were willing to share information with me. And it's something that I really value and want to do more of, as I go forward in business. So it's really that. But then also I think that I think that the private lending world especially is an area that more individuals should be looking at, especially if they're working with the right individual. It's a great way for business, for individuals to align interests and to make money together. I get just as excited. Don't get me wrong, I get excited when we sell a property and we make a profit. But to be able to get on the phone with a private, one of our private lenders, and he's smiling and the closing's just happened and the money's gotten, gone back into his account, or he's like, this is great, let's do the next one. And really feel like you're, a working partner with someone. But also the returns that our capital partners are making on the, the 2 to, the 10 to 12% range, sometimes a little lower, sometimes a little higher, depending on the deal, the structure, a lot of things. But what individuals can make, and also what they can make in a very, if they do it right in a I don't want to say riskless environment, but a much, much more limited risk arena than in the market or in, a lot of other investment opportunities.
Yeah, so why don't we finish with that, and then we'll have some ways that people can reach out to you. So people right now are there's a lot of insecurity in the world right now, and people are looking for that. What if somebody's never done private lending before and they don't understand it? What are some of the ways that y'all structure your deals to put the odds in the private money lenders favor when things are going well, and even if things go sideways?
So first thing we do is number one is we structure the deal, and we structure all the details around the deal the right way. So they get they record a mortgage on the property. Um, there's a promissory note that's done. Our attorney handles that, or an attorney we work with that really is representing the private lender. He just knows how the whole process works. So we start with just kind of the basics and the foundation of getting the instruments put in place so that the private lender is secured. So we start there. So we have all the documents in place. We insure the property, and we pass along that insurance to them with them listed as an insured, or mortgagee, and so that if something happens to the property, burns down or whatnot, they get their interest taken care of. We do that, and then along the way we're giving every kind of, usually it's every 2 to 3 weeks, we're giving a status report on, hey, here's what's going on, here's what's happening, here's what's been done, and keeping things very transparent to, I've had property with private lenders that are like, hey, I just want the lockbox code. I'm going to go over and, check out the property and the alarm code. And we say, absolutely. We don't want to hide anything. Go take a look. Just, be careful. It's a construction site. Just don't hurt yourself. And making sure that they're very, very transparent. Obviously we go through a closing process. My company and I personally never touch their money. Their money goes from them to the title company or the closing attorney. Money's never in my hands. It literally, just like if I was getting a loan from Bank of America, it goes, we get title insurance against the property. So they're protected in every possible angle. They've got full transparency on what's going on. They've got everything insured so that if something, is catastrophic or goes bad, they're fully taken care of. And then along with the updates, they're fully clued into what's going on. They can be, and making sure that they know that, hey, if we've got a property right now, it's taking longer than it should. And I'm on the phone kind of almost on a weekly basis with our private, our lender, and just letting them know, hey, it's, our GC is kind of gone bad, and here's what we're doing. And also, part of the benefit to working is I told them we've got more than enough money in the bank to cover interest payments on that house for the next 30 years. So if I'm just sitting there making interest payments, but also knowing that along with that is knowing what's my strategy, what's my buy box. We buy in very specific areas so that if in very specific properties, so if things do go bad, we'll just fix it up, put a tenant in there, and then refinance them out, and I've got a rental. As opposed to a flip. So there's a lot of components. I know I kind of jumbled that together, but we do a lot of things to protect. We don't want to take, we don't like taking on a lot of risk. We want to be very detailed, very, methodical about how we do this. And also, most importantly, is number one, our capital partners will never lose money. They will never lose money. And we personally guarantee everything and go from there.
Yeah, that's a really strong value proposition. So that's unbelievable. I think there's going to be a mass of business owners that are going to start getting their businesses ready to sell so that they can give you all their money and start investing in real estate. They said, I'm going to do step one in this podcast and step two. They pretty much gave them the whole formula. Congratulations on that. So Preston, if somebody wants to reach out to you, your team, get a copy of your book, see what you guys are doing and see if it's a fit and if they can work with you and if they qualify for your program, what's the best way that folks can reach out to you and your team?
There's two easy ways to get a hold of us. They can shoot me an email. My email address is pletts, P is in my first name, Preston, and then my last name, Letts, Letts, at assuredhomebuyers.com. So pletts at assuredhomebuyers.com. Or they can also give me a call. I give out my, my cell phone. We stay small as a company. I like to be able to give out my cell phone, and they can call me at 915-8051. And, give me a call, shoot me a text, and we'll set up some time to get on the phone and kind of go through, kind of our process, how things work, our business, and go from there.
Wonderful. Okay, cool. Well, that sounds great. We're going to put all the info down below in the notes too, so people definitely reach out. Preston, it was a pleasure as always. Love to have you back on the show soon to talk about what you're doing in some of your different niches and some of your talk a little bit more about your buy box and why that's working for you. That sound okay?
Sounds great.
Cool. All right, guys. Well, thanks for tuning in, and until next time, check out some of our other episodes and reach out to Preston. All the contact info is down below. Have a great day. Bye, guys.
Thanks, Max.